but it is all about earnings. Let's start by putting the focus on a Quess Corp. A strong first quarter coming in from the company, posting a revenue growth of 50%, which also led to a 19% jump in the profit number. We have Ajit Issac, the chairman and managing director at Quess Corp, joining in to give us a sense really of how the quarter played out. Mr. Issac, a pleasure having you on. Clearly a strong quarter this time around for the company. Take us through what has worked for you this time.
Well, I think from an overall standpoint, there are 3 or 4 things that have worked well for us. Our growth momentum is strong overall. Our top line growth is about 52% over the last year on a much larger base. Our organic growth for this quarter is about 28%, which is again much above the 20% outlook that we generally have for organic growth. Our big businesses are doing well. Staffing, FMS, they're all doing very well. They maintain market leadership positions. Our progress on acquisitions have been good. Their contributions at the EBITDA level has picked up, and our order books remain strong, as a result of which our visibility for year-end revenues is good. Overall, I think our 100 million target of EBITDA for 2020 remains well within our reach.
All right, so the 100 million EBITDA target by 2020 within reach, and you mentioned the 28% organic growth that you saw this time around. Inorganic growth has actually been a focus area for the company in the past. Give us a sense then of between organic and inorganic growth. What do you really see driving the growth of the company as we go into the rest of the fiscal?
No, while we would like to increase organic growth, I think it should be seen in the context that our base is continually increasing. From a revenue base of approximately little less than $1 billion, we'll be close to about almost little short of about $1.5 billion for this year. So on a larger base, if we can continue to keep growing, in excess of 20%, I think we have a strong revenue funnel and pipeline that are both well for our shareholders there.
All right, if we talk about the margins, then this is where we saw a slight bit of contraction coming in at 5.2% here, EBITDA margin. That's a contraction from a 5.8%. In an otherwise strong quarter, help us understand where you saw the compression in the margin from?
No, 2 reasons for this. One is, at the EBITDA level, we've lost maybe about 10 to 13 crores of EBITDA due to seasonality. Some of the newer businesses that we've bought have a seasonal element which we never had in the past with our older businesses. For example, in the FMS space, a large part of our revenues come from Manipal Integrated Services, which we bought last year, and which has an education component. Academics, as you realize, is closed in summer. So food and beverage and the maintenance of facilities for that period, when the institutions were closed for holidays, suffered a bit. Also, Connect Business Solutions, which is the BPO that we bought from the Tata Group, has a large segment of its revenues coming from the financial services space, where collections in the last quarter is a big component of their revenues. So while it sees a spike in Q4, it tails off in Q1, and Q1 is usually a much slower quarter. The reason for these 2 have contributed to a reduction in EBITDA by almost about 13 crores. Further, at the PAT level, there's a non-operating accounting charge of about 16 crores due to the acquisitions that we've done. If you add that back to PAT of 54 crores, we'll come back up to 70 crores, which means we have grown by about 50% again on last year's number of about 46 crores. So that's the normalization of the numbers to see it in the context of some of the accounting entries that needed to be passed.
All right, fair enough. So that is an explanation really of what played into the entire margin performance this time around. I wanted to get an update on your acquisition of Monster.com in the last quarter. What has been the performance so far? By when can we start expecting contribution to revenue from Monster?
So Monster is actually in a period of rebuilding its product. We invested into the company in January this year. We expect the product rebuild to continue through to about August, which is about a few days away actually, and we will hit the market with a new search product and a mobile-enabled portal, which is undergoing testing right now. So I think the revenues, estimates of profit, and how this investment is turning out is better done 1 quarter after the product goes to market, which may be by December of this year.
All right, and if we talk about 2 prior acquisitions, if we talk about MFX and Brain Hunter, how has the integration been so far?
MFX and Brain Hunter have been doing well. They've been fully integrated now, and the acquisition has turned out in the direction that we wanted it to. The other acquisition, the IT space that we did more recently, was of Connect Business Solutions, which we did in the last financial year from the Tata Group. Connect continues to do well. We are happy with the results that we've achieved in the first quarter of this year. We think we are on course to achieve the year-end numbers for Connect too.
All right, fair enough. So that's the update as far as the acquisitions go. Let's talk about markets then. Which markets are the ones that you really are focusing on at the moment, where you see strong growth potential going ahead from here into the rest of the fiscal?
Yeah, in Q1, our security services business did very well. They had the single largest sales contract done, which was about 4,000 people in its history. So they're up to about 18 to 19,000 people right now. Our staffing business continues to do well. We're close to about 165,000 people in that. We started the NEEM program, which is the apprenticeship program. We're calling it CLAP internally. We've got 3,000 people that we've added in the first quarter, and we've got visibility for an equal number for the next quarter. Overall, our market leadership position, we're number one in the staffing market. We continue to hold on to that. Our FMS business is doing very well too. We right now have about 62,000 people in the FMS space, again in a leadership position. These two businesses are opportunity areas. In the future, we think our BPO business at Connect will continue to get more market share as they get business from the unorganized sector, and also when clients want to move into a larger player who has a more national presence. So that's one business that we're bullish about. We also have recent acquisitions like Greenpeace in the landscaping space and Vedang in the telecom, tower cellular services space, both of which are looking very good, led by good management teams, and we think that these are opportunity segments for us too.
What is the current cash on books? Just trying to understand what the debt picture looks like at the moment, and any acquisition plans then that you're looking at in the near term.
We have cash or cash equivalent of about 880 crores with us against gross debt of about 990, which means our net debt position is only about 110 crores, which is about 0.3x of EBITDA. Even at the gross debt level, we are about a little more than 2 times the EBITDA level. So we are in a good position versus in our balance sheet, and we expect to be able to do 1 or 2 acquisitions using the cash we've got in the balance of the financial year.
So a couple of more acquisitions is what we can look for this financial year. Any specific focus areas as far as these acquisitions go?
We'd like to make an acquisition if we can in the customer lifecycle management space, where we want to add more verticals to the services that we have at Connect. That's one area where we'd like to focus our efforts in the M&A space.
All right, very quickly then, before we let you go, Mr. Isaac, overall, if we talk about fiscal 19, what is the outlook that you have? Do you expect that this will be a strong year, especially coming on the back of this first quarter performance?
Well, as a company, we don't issue guidance. We are long-term in orientation to building the company. I think we are well on course to achieving our stated position of becoming a $100 million EBITDA company by 2020, which means we have to achieve a first milestone this year, go beyond that to get to about $100 million of EBITDA by 2020. We are well on course for that.
All right, we leave it at that. A pleasure speaking to you. That's Ajit Issac, the CMD at Quess Corp. Clearly a strong quarter coming in for this company. Revenue seeing an uptick of 52% if you look at it year on year, coming to about 1,968 crores, and that's versus a 1,297 number that we were working with last time. EBITDA also seeing an uptick, 36% jump coming in on that front, 102 crores versus a figure of 75 crores in the same quarter last year. But the margins is where we saw a bit of pressure, but that's where we got the clarification from the management. 5.2% is where we saw the margin come in this time, and that's versus a figure of 5.8%. But the PAT revenue, EBITDA looking quite strong, 19% jump coming in the profit after tax number. The people services business particularly seeing a strong jump of about 40%, and tech solutions as well, 70% uptick is what we saw in that segment for the company as well. So Quess Corp is a company to keep on your radar going ahead from here. But pharma companies could be in